Listings are way up, sales are way down, and this has Canadian housing prices down to a level not seen since September of 2021. Yes, all of the price gains across Canada since September 2021 have now been retracted, except in a few markets, because what is happening in some markets isn't happening everywhere. Yes, there are some bright spots in the Canadian real estate market, and I'm going to tell you all about those in a second. But before we get into it, my name is Nolan Matthias, and if you want the latest Canadian real estate and finance news, this is the place for you. So do me a favor, hit that subscribe button and hit the like button so more people like you can see this video. And don't forget, you can still go to mortgagesecrets.ca and get my Mortgage Secrets book completely for free. All you have to do is pay the shipping and handling. This explains everything you need to know about how to negotiate with a bank, negotiate with a broker, and how to get the absolute best deal on your mortgage without jumping on a whole bunch of landmines and surprises that come along with getting the best rate. So check it out, mortgagesecrets.ca. Okay, so let's jump back into the old school news format, which so many of you love. I'm happy to bring it back, and thank you for everyone in the comments who said, hey, we want you to go through the news the way that you used to, and we're going to do exactly that. So we're going to start with this. From Better Dwelling, this is a summary of the Canadian Real Estate Association's most recent report. It talks about what is going on in the Canadian real estate market. I'm going to show you CREA, the Canadian Real Estate Association's most recent report as well as their graphs. But this article gives a really great summary of what's going on in the market. So Canadian real estate sales plummet while inventory soars. That is exactly what we're seeing in a lot of markets across Canada. Canadian real estate is having one of the worst spring markets on record. Canadian Real Estate Association data shows home prices slipped lower in May. Continued weakness is the result of weak demand, which was expected to recover once rates were cut. Unfortunately for sellers, they overestimated how many buyers would appear ahead of rate cuts, with inventory surging to one of the highest level on record, with sales plummeting to one of the lowest. So in other words, there was a whole bunch of sellers who expected the market to pick up once the Bank of Canada made a move, and that isn't actually happening. Now, is it really that a whole bunch of sellers expected this to happen, or are sellers getting to the point where they can no longer afford their homes, and that's why there's more listings showing up, as well as more completions of condos, which we'll talk about the Toronto condo market's numbers in a second here. But is this the result of more people having to sell, not just more people expecting there to be an opportunity to sell in the market? And I'm not so sure which of those two it actually is. But if you take a look at the Canadian real estate prices, you can see they've been slipping lower for quite some time. And obviously, if we go back to September of 2021, you can see that prices today are pretty much where they were back then. Now, they go on to say Canadian real estate prices slipped lower across the country. The price of a benchmark or typical home fell 0.2% to $714,000 in May, about 2.4% lower than the same time last year. Existing home prices over the past 3 years have only advanced 6.2%, averaging a 2% compounded annual growth rate over the period. So what they're saying there is that over the past 3 years, we had this massive run up, but now because of the turn in certain markets across Canada, we're starting to see those returns that were once, 10, 20, 30% start to correct themselves and see more normalized growth. And I'll show you a little bit more on that in a second. Weak demand played a big role in the weak price move. Annual growth of seasonally adjusted existing home sales fell 5.9% in May. It marked one of the weakest Mays on record, comparable to the depths of when the pandemic first kicked off. And last but not least, they point out this Greater Toronto condo inventory has hit an all-time high, according to the bank. Now, this is something that is interesting in the Toronto real estate market because, yes, that Toronto condo market inventory is at an all-time high, but prices aren't coming down as much as you would expect when you see those high levels of inventory. And this is because of the onslaught of condos that have come onto the market as new ones are being built. And people are simply just trying to get out of these before it is too late. So if you own a condo in Toronto or you're looking to buy a condo in Toronto, there's some interesting things happening there. And I would give it a little bit more time if you're a buyer to see what happens. And if you're a seller and you need to get out of that property, I'd just be getting out of that property as fast as humanly possible. Now, what's going on in a lot of the markets isn't what's going on in all markets. If you take a look at the Calgary home sales, for example, they're setting records. The Calgary Real Estate Board says sales totaled 2,915 in June, up 65.3% compared with a year ago. Now, the reason for this is because the cost of living in Calgary compared to, or as well as I should say, the price of homes and the amount of income on average that people make creates a significantly better picture than many other markets across Canada. That's why we're seeing people move to Calgary as they do when times get tougher in other areas and Calgary continues to buck typical trends, which tends to be how Calgary and Alberta works relative to the rest of the country. However, that being said, sales were down from 2,985 last month, which it's only about 70 sales difference, so it's not a huge deal, but there seems to be a trend. Maybe it's a one-off month where sales are actually decreasing, so maybe that upward trend in the Calgary market is starting to dissipate. But the sales came as new listings in June totaled 4,135. This is up 23.6% compared with a year ago and the second highest ever for the month of June, which means there's a lot of people in Calgary who are also looking to sell for whatever reason. New listings in May, by comparison, were 4,564. So what we're seeing is the number of new listings come down. But what you'll want to take note of in a second here is the months of inventory that is available, because that number is still very low and it still indicates a seller's market. So the average price in June was $494,111, down from $510,000 in May, but up from $460,000 in June last year. And when we take a look at the actual Calgary housing market stats, what you will notice is that the benchmark price, which is a better determination of what is actually happening with prices than the average price, is up to $605,300. Sales are down just slightly, but the new listings have increased significantly over last year, like we've talked about. But that being said, the inventory that's available, while it's up from last year, is only creating about 1.1 months of supply. Typically, 3 months of supply is considered a balanced market. 1.1 months of supply is definitely a seller's market, which means there will continue to be upward pressure on prices. So even though listings are high, there still isn't enough supply to meet the demand of the people who are coming in and buying. And if I jump out of here real quick and just show you the days on market, what you can see is that the average days on market for a home in Calgary is 19 right now, which means that houses, if they're getting put up for sale, are getting sold very, very quickly. This number is typically well over 30 days in a balanced market. Now, moving into the actual CREA stats, I want to take you through the graphs here and show you exactly what's going on. So first is the monthly home sales. Now you can see that the 10-year moving average was pretty consistent over basically the last 2 decades. But when we saw what happened during the pandemic between 2020 and 2023, what we saw is this moving average come up. But if you take a look at where the moving average would have been if we wouldn't have had that weird event that happened that created more sales in the housing market, you can see that home sales are pretty much just under where that 10-year moving average would have been, which is a pretty good indication of the fact that we're back to more of a normal market. So this isn't necessarily a bad thing that we're seeing home sales decline and we're seeing new listings and all of that. It just shows that we are more or less back to normal. And my guess is that the 10-year moving average will start to come back down and start to look more regular in the next little while. Now, I want to take you through the whole package of data here and whole package of graphs, starting with residential sales activity. You can see that, if you just look over top of where I am here, you can see that residential sales activity is actually pretty normal for the month of May and the month of April relative to previous quarters. It's still down from where we were in 2019, but everything's looking kind of more relaxed here. There isn't a ton of buyers, there isn't a ton of sellers. There's actually a ton of both, but relatively speaking, they're in balance relative to the amount of population that we now have to what you would expect. And then as we go and we start to look at the residential new listings activity, we're starting to see those numbers come up quite significantly. And as we go a little bit further here and we look at market balance, you can see that the sales to new listing ratio is getting back down to where we want it, which is where it would be relative to 2019 and early 2020. This whole time here where we saw the sales to new listing ratio go through the roof, this is when we saw the big increases in prices. And what we're seeing now is because this sales to new listing ratio is coming back down to normal, we're going to start to see housing prices kind of get back to where they should be, as opposed to where they could have been if the craziness in the real estate market had continued. Now, the residential average price, as you can see, has kind of floated around here. And again, I don't love average price because it doesn't give a really good indication of what's happening in the market. If the lower end of the market is super active and the higher end of the market isn't, that lowers the average price. If the higher end of the market is active and the lower end of the market isn't, that messes around with the average price. And if you have one massive home in a city that sells for 20, 30, 40 million, yes, that can also affect the average price as well. So this isn't really a good indicator. The benchmark prices are a better indicator, but it kind of gives you an idea of what's going on anyways. And then moving on to the residential average price, and this is the point that I want to point out. This is the point I want to point out. This is kind of the thing that I think is most interesting. If you look at what's going on with residential average prices across Canada in May 2024 versus May 2023, what you can see is that most markets are actually up, with the exception of BC and Ontario, where the majority of the population lives. But if you're in Alberta, you're in Saskatchewan, Manitoba, Quebec, New Brunswick, Nova Scotia, Prince Edward Island, or Newfoundland, housing prices are continuing to go up. And what this is that shift from the more expensive, unaffordable markets to the more affordable markets that you would expect when the actual market forces start to do their job and move people to more affordable areas. And as you can see, Alberta and Newfoundland seem to be the two areas that have the biggest increases in prices. Now, obviously, in Newfoundland, you have less money making power, less earning power. So buying there at a higher price can be arguable as whether or not it's a good idea or not. But if you can move to Alberta and have a similar income to what you have in BC or Ontario, well, Alberta starts to make a ton of sense from the perspective of a really affordable and great place to live. Now, there's one more point that I want to touch on here, and that is that homebuyers in Canada are now betting on more rate cuts with adjustable loans. And I need to have this quick conversation with you about adjustable rate loans because if you're choosing adjustable rate loan right now, with it being priced at almost 2% higher than what a fixed rate mortgage is, well, what you're doing is you're choosing a mortgage with the assumption that everything you expect to happen is going to happen. And I need to emphasize the fact that that may not be what happens. So choosing a variable rate mortgage right now is really taking a risk that you're going to pay more for the next 1 or 2 years in hopes that interest rates come down enough for you to actually save money. And the reality is the same thing that we talked about in 2020 is the same thing that we're talking about now. And that is that you always want to choose the lowest rate mortgage that you can get at the time you get the mortgage. Because when you have a lower rate in the beginning, it means you have the lower rate when your mortgage is the biggest. And there's two strategies for this. The first is to just go ahead, take a 5-year fixed and just run with it. And if interest rates go down and you've got the right mortgage with the right lender, not with a B lender, not with a bank, but with a prime lender like a First National or an MCAP that actually has a better product because they have to have a better product with lower penalties that will allow you flexibility to get a lower interest rate if interest rates do go down, well, I think that's a great option. Now, the other option is there are banks out there, there's ones that we deal with that do have great 3-year mortgage options right now, which gives you some time to borrow at around 5% and see what happens with interest rates over the next little while. So that if the Bank of Canada doesn't actually lower interest rates, you're still paying the lower rate. It's still kind of a variable rate strategy because you're taking a 3-year mortgage instead of a 5-year mortgage, and you get to kind of see what happens over the next year or two. Now, all of that being said, the 1-year rates, the 2-year rates are so insanely high priced right now that they don't make any sense. But the 3-year mortgage is definitely a happy medium if you are willing to give up those last 2 years at the lower rate, just in case interest rates don't come down as much as expected. So if you want to know what's happening with interest rates, check out this video right here. And if you need a great mortgage broker, talk to us at Mortgage 360. We can make sure that you have no blind spots and you don't do something silly like pay 2% higher for the next 2 or 3 years in hopes that you're going to get a better rate later.